Hello, my name is Darius Kraucionis, and welcome back to Founders Unchained, the show where we sit down with founders, builders, innovators, and investors. The show where we discuss about how to build startup from scratch. And today we have a special guest, Nick Ayton, who is the CEO of UAE Market Entry. And pleasure to meet you here. Thanks a lot for joining this show. For those who don't know who you are, can you just tell us a little bit about yourself, about your background, what your business does, and the most importantly, how you can help startups to grow?
Okay, sounds good. Thank you, Darius, for inviting me to your session, to your show. My background is computer science from the 70s. So I've seen every technology wave come and go over the last 50 years. And I like technology. I'm at the cutting edge of technology, so I sort of follow it and closely. My background's always been in startups. I did have a period of working in the large IT services global outsourcing companies where I ran some large divisions. And I was fortunate enough to be at the forefront of the business process re-engineering revolution in the 90s, working with Jim Champion, Gary Hamel, and that was quite an eye-opener as well. And then more recently, back into the world of startups, getting involved in my own, helping other people with theirs. And also we're a family business as well. So I work with my three sons who all got businesses of different kinds. What we're doing right now quite heavily is we've got a long history of being on the ground in the UAE, in Dubai and Abu Dhabi for the last 15 years. And we spend most of our time now, I spend most of my time now, helping companies enter the market, whether that's technology, whether that's startups. And it's like any region, it has its protocols, it has its nuances, it has its particular ways of doing things. And that's what we do. We do spend a lot of time helping companies from all over the world. I would say exploit, which is one of the region's probably fastest growing and most attractive geographies, not just because of its location logistically, because you can reach half the planet's population in less than 4-hour flight. But it's as most people listening to this will probably know, it's a prospering environment, and there's plenty of capital here, and they love their tech. So that's what we're up to.
Yeah, amazing. And there are people who actually want to start businesses, but also we are considering, which jurisdiction to pick. And I think, the MENA region, UAE, this is something what is really attractive. And I think it's important to show to the people, the bright side. Can we touch your experience working in Solarix Ventures? Because as I understand, it was like a family office, right?
Yeah, we can talk about that. Yeah. So part of the reason why I'm in this region is that quite a while ago, I got invited to talk at a family office summit, and it was attended by some fairly heavyweight, powerful families here in the region. And from that sort of early beginning, we've done a lot with family offices. In fact, last week we had our own family office summit where 200, 300 people turn up, all principals of families, chief investment officers. And it's quite a big event, and it's curated because the families come from all over the world, but we have a high concentration of families in the UAE. And there's a big major difference, Darius, because the families that are American or English or German or French or from wherever, a lot of those families are no longer operational in the businesses where they made their fortune. Whereas in the Middle East, it's very different. They still run operational holding companies and multinational conglomerates. And that makes it very, very different to deal with the families here, because the families are looking for, innovation, partnerships, technology. They're looking for things to invest in. Whereas the families in other parts of the world, they're putting the money in fund of funds, or they're putting into venture capital. They might be doing some private credit deals. Putting money into private equity is probably, given what's going on in Europe and the UK right now, is attracting a lot of attention. So that's where we sort of play in the family office space. And if you like, we help bring companies to the region, but also we connect them with the right conversations. Now, the region is very interesting because it's a series of tribes, essentially. So you have the big boss man, the Al Nahyan family in Abu Dhabi, where that's the seat of power for the 7 Emirates. It's where ADNOC, one of the world's biggest companies, oil company, is based. That's where all the sovereigns are based. That's where most of the ministries that matter are based. And And the families are very interesting because you'll have some of the principal families and then their brothers and their cousins will sit on top of different institutions, ministries, authorities, as well as sovereign funds. So that means, Darius, that the region is very tricky to navigate. And what works in the West in terms of a strategy for raising capital or selling or whatever, it doesn't work here. If you get your pitch deck out and start selling immediately, the doors will close, they won't open. So that's an interesting sort of difference.
Yeah, so this is what I wanted to ask you. Actually, what is the difference between Western investors comparing with, this region investors? And as you said, it's not easy to raise capital. What I should know actually before I go and get any capital from family offices, I don't know, venture capitals who locally works in that region?
Yeah, I mean, let's unpick that because there's a lot in that question. The principal region here, if you think about Dubai, it didn't exist 40 years ago. And if you think about what London took 1,000, where I was born, London took 1,000 years to become a capital city. Dubai took 50 or 60. So it's things happen quickly here. Decisions get made quickly here. The other aspect here is the difference between public and private capital here is very blurred. So you have, for obvious reasons, you have the ruling families and they deploy capital in lots of different ways. The question we always get asked is, okay, we want to set up in the UAE. What's the best way to do it? It's a land-based, it's a real estate-based economy here. So land is quite scarce. Although Abu Dhabi is quite a big country or a big emirate, but Dubai is relatively small. Sharjah, Ajman, some of the other emirates are relatively small. And because it's a land-based economy, you also have a low or zero tax economy as well. So they allow you to come into the market, they allow you to trade, they allow you to make money, they allow you to create wealth, they allow you to own 100% of your business, own your IP. And they have created a series of regulations and systems that are very supportive. Whereas in Europe and arguably in the UK, you may, as a founder, be facing a headwind of regulation, of red tape, and the cost of doing business is high. All that falls away here. They've made a concerted effort, especially in the startup ecosystem here, to make it light touch government, light touch regulation, but also put in place a lot of support systems that makes it much easier for startups to get traction. But it does start with choosing the right license. Everything is a license here. And a lot of people might say, oh, it's expensive to set up and do business in the Middle East. Well, it's no more expensive than other parts of the world, considering the tax situation. If you trade within the UAE, it's 9% corporation tax, but that's not on all income. That's only on a qualifying income above a certain threshold. If you want to set up a free zone and the most of your business activities and invoicing is outside of the UAE, then you pay zero tax. So the capital structure is really, really important. So you shouldn't just appear and sort of set up a company and get a license and try and open a bank account. You need a plan, because we see a lot of companies here, they rush at it, they get their license, they set up their free zone company, and then they find they can't get customers, they can't get a bank account, and that's because they don't have a plan. The other option, of course, is a lot of companies try and test the market here by trying to win some customers from where they're based in the UK and France, Germany, America, what have you. And that's tricky as well, because the challenge with that is that the Emiratis, the authorities want to see you committing to the region. What they don't want to do, and what happens in the venture capital world, is that an American founding team will come over, wish their pitch deck, they'll go round, have lots of conversations, but they'll leave with no money. And then you see the VCs who are raising money from LPs and what have you, and the same happens to them, because the region wants to know what your strategy is for the UAE. Why are you here, and what are you going to do to help the UAE meet its vision and its targets? Because the country here publishes all of its plans, all the authorities, all the ministries publish it, and they have a 20, they have a 50, and they have a long-term plan, because they have stability of governance here and government. So therefore, it's very transparent. All of their plans and all of their activities are very well documented. And it's up to startups also to take advantage of that transparent information And the secret is to try and, fit your narrative of what you're going to do to the region's goals and aspirations. I mean, that's pretty essential. And it's pretty straightforward, to be honest. And that's the major difference. If you come here with no plan, you'll find it very difficult to open doors. If you come here, just set up a company and you rush it, you may have the wrong structure, and then you can't get access to capital, you can't get access to funding. But most importantly, what works in the West doesn't work here from a sales, marketing, and a strategy point of view.
What takeaway I took from what you said, it is basically that if the startups are coming to this region, we need to commit to do business, focus to that specific region, right?
You need a plan. Okay, so the fact that all of their plans from the government, the country, and their activities are very well publicized. So the world knows that they're investing a lot in data centers, a lot in AI. They take healthcare very seriously. They invest heavily in longevity. It is a global logistical hub. So supply chain is very important. They have 4 deep ports here. They have the world's biggest airport and. They have a very, very attractive food and beverage and consumer retail sector here. And they have 2 main financial centers. You have Abu Dhabi Global Markets and Dubai International Financial Markets. Both of those are under English law, by the way, and international law. And they are very, very important factors to remember, because any kind of regulatory business or any kind of business, a family office being registered, an asset manager, a VC fund, you have these two zones from which to get a license. And because it's international and UK law, it's trusted globally. So this region also is the second largest, or maybe number 1, in foreign and direct investment at the moment. So what that means is that the rest of the world is very comfortable with deploying capital into this region, investing into this region. And that's really, really important, because as I'm sure you know, there's a lot of myths around the UAE. Is it good to live, and is it restrictive, and do you have to have a local Arab on your business, and you can't own 100%? Well, all of that used to be true, but not anymore. I would also say that this region embraces technology. It's embraced digital assets massively. You have very, very constructive and progressive alternative finance, crypto capital markets. You have good regulations, very supportive. They won't tolerate any kind of behavior. There are rules here, but they do embrace digital assets. And there are lots of funds here, tokenized funds, and lots of digital asset funds, hundreds in fact. The government is a very joined up digital government. It uses blockchain extensively. And when I say joined up, if you register for your company, for example, you bring your passport, you show your documents, but there's 4 or 5 different government agencies or departments involved. And if your information isn't accurate, they'll pick it up instantly. And it happens all the time, that you've got a different home address, or this doesn't match with this. So it's an extremely well joined up government. And that means things happen quickly here. It means decisions happen quickly. And just knowing that, of course, is helpful to founders and startups who want to come here, because there's a lot of myths around what used to be. But the world that we sit in today, I would say it's probably the most frictionless, progressive, easy to work in environment probably anywhere. And there you have it. That's why I think you've got the expat population here has doubled in size. The real estate market is doing really, really well. They've built about 4.9 million apartments and homes, and they're all sold. The deep water ports here, and there's 4. There's Ajman, there's Rakaz, or Ras Al Khaimah. You've got Jebel Ali, which is in Dubai, and then you've got the Khalifa port in Abu Dhabi. It's full. Warehouses. And the background, Darius, also is this country is industrializing. It's not just consuming. It's not just a travel hub. It's not just about airlines and Emirates, but they are industrializing. So they are self-sufficient in aluminium smelting, and they're building steel plants. And the whole mantra of made in Dubai or made in the UAE is a significant one. And as arguably the West is being deindustrialized over the last 50, 60 years, which is a huge mistake in my view. Obviously, with the administration in North America, there's a big effort to reindustrialize and bring jobs back on shore and get investment into industry. Look at the trend. Malaysia, Indonesia, India, and of course, China, they are huge manufacturing industrial economies. And this region is more aware of that than anywhere. The environment here in terms of minerals and materials and precious metals and commodity trading, all of those things are up front and center in the strategy and interests of this region. So, any startups coming in that can play into that product world of manufacturing, big tick. Any startups that play into the concentration on healthcare, because they have had their challenges here with trying to get the population more healthy and moving and exercising. So that's a big thing. Consumer retail is booming. I mean, if you look on the roads, 60% of the cars on the road are Chinese. So that's a very interesting topic. The investment in data centers, the investment in AI processing and computation at the edge. So smart cities and smart infrastructure and so on. So, all of the sectors, financial services, whether it's a payment company, whether it's a distributed finance company or what have you, all of those sectors are booming. And every now and again, whether it's Dubai, Abu Dhabi, or Oman, Jordan, Bahrain, Qatar, they're all launching funds to attract startups into the region. So the startup capital is growing. It's not getting less. It doesn't mean to say you come over with a great idea and you leave with a check. As I say, you've got to demonstrate how what you offer and what you do can tune into that country's vision and values, and how you're going to make it succeed and prosper. So there is so much opportunity here, but to navigate all of that and to tune into where you can play, where you can add value, takes a lot of thought.
Okay, and so Nick, can we say, for example, that the people who will be watching this, let's say, and maybe we have some ideas, to start business in that region, can you tell us, basically how we can help startups, if somebody will reach out to you, how specifically you could help, companies to grow in that region, or I don't know, maybe to get investments, or maybe you can act as a connector. As I understand, you have really huge experience and knowledge about this region. And for many people, it might be very, very beneficial. So can you just explain how specifically it could help startups?
So the UAE Market Entry side of what we do is also supported and backed by another business that we have, which is an accounting, tax advisory and audit firm that operates here on the ground. And it's a regulated firm. So we can play both sides of the equation here. The UAE Market Entry, this is where essentially I use my sort of contact base and my background of startups and technology in helping companies navigate the right approach to enter the region in terms of, are they looking for capital? Are they looking for a partnership? Is it a distribution deal? Is it a partnership? Is it a licensing of IP? All of those things need to think through in terms of what your business model is going to be. And then I can think about, okay, well, who is best to go and talk to? And I'll come back to that in a second. That's a big factor. On the company structuring setup side of things, there's two things important. It's not just about the license and where you base your business here, whether it's a free zone or a mainline license, because there's lots of opportunity there. But it's also about your exit strategy from your home jurisdiction. So if you're in Europe, you don't want to set up in the UAE, start building a successful business, and then the tax man from your home country is chasing you. So you have to have a clean exit, and you can exist in both. You can have a foot in both camps, and there are structures that allow you to take advantage of the tax treaty and the rules that are there. So it's a twofold process that we help with. First of all, it's what is it you think you can sell, product, service, whatever it is. And then to stand back and actually have a look at what the market is offering. What's the competition? Normal stuff, Darius. What's the competition? What's the size of the market? What's the capital flows? And. So you can identify who's in there. The second part of that is start building the narrative and building the local brand. Because the first question the locals, whether it's a government agency or whether it's a family office or a family-owned business, multinational supermarket chain, whatever it is, there's two questions they will ask. The first thing is, are you here set up? They really want to make sure that you've invested in the market by buying a license and setting up a bank account so you can invoice locally in dirhams. That's the first thing. The second thing they'll ask is, where have you sold what you do before? Do you have any reference accounts? And. That's two key facets. Obviously, if you're a startup and trying to raise capital, you may not have customers. You may see the region as an opportunity to to raise money, which is okay, and that's workable too. There's lots of active VCs here. There's lots of active families that will deploy capital, but doing the research in terms of who's deploying capital, what are they already invested in, what are the other things within their portfolio that you could add value to, be accretive to. So many founders will knock on the door and they're offering a fantastic product or service, but the investor's already got an investment in that area. So he's unlikely to put that at risk. So often a no isn't no, what you're doing isn't very good. It's often a no, it's the wrong cycle for us. We've already got one in our portfolio. It's often a timing issue rather than a no, what you have is not for us. So what we do is we can do a number of things. We can help with that initial planning and research at the front end. Obviously, we can make introductions. So if you want to get licensing IP distribution, let's say for argument's sake, you have a consumer retail product. Well, there are 5 or 6 key families that run all the distribution of consumer. They have 25,000 retail outlets. Some of the families will run some of the big supermarket grocery chains here, and they'll also own all the back-end logistics and what have you. So when you know that, of course, it makes it much easier to sort of see where your proposition fits in. So if it's a payment system, point of sale system, something in the supply chain that helps families, be more efficient in that area. But yeah, fine. It could be an agri-tech. Food, water is a big deal here because they want to be self-sufficient. So it's a massive factor. And of course, tech. They love their tech here and they want to invest in it. They want to deploy it. And that's the other factor. They do want to make investments, but they want to deploy it. And the advantage of a family, of course, is if you get the right family here, they may invest in your company and your technology, but they'll also be a customer for you to deploy it, or they may want to distribute it in the region. So that's what you need to work out. The plan to enter. We'll do some research. We think about the plan of getting on the ground. What's the right strategy for you? Is it distribution? Is it licensing? Is it partnering? And if you're going to raise capital, where is the best place to start to have a look? And then once you've decided that, and we get you on the ground here, you've got to spend some time here, and knowing who to talk to will save you months and months and months and a lot of money. And that's a big, big plus of where we come in, because we've been here quite a while and we know who to talk to. And you know what it's like. You could be a young founder with a great proposition, but you could have hundreds of meetings, but 99 of those 100 meetings could be a waste of time, but you don't know. So that's what we do. We help position, we help do the initial planning and research, we can help set up the physical structure, and then we can make the introductions to the people that matter.
Yeah. So if I would, think about a business in Dubai, for example, I would come to you definitely. You would be like the first person I would reach out, asking for help or maybe to offer you some kind of partnership beneficial for both of us. You are great connected with multiple entities. And I think, for the people, especially who is watching this episode, it's good to know that, we can actually reach to you out and we can solve many problems, with your help. What else? What other benefits you can see?
The obvious benefits, obviously, is lifestyle. It's sunny, and the winter is just finishing, and it's starting to warm up. It's sunny. It's very safe here. The one thing that people come here for the first time, they're very surprised that you could leave your mobile phone on the table in a restaurant, and you could forget it's there, and it'll still be there when you come back the next day. So it's very, very safe. The other thing for founders and startups is a big factor is that everyone here has a side hustle, which is really interesting because there's a massive expat community here and they're very welcoming. And there's a lot of young business owners and founders here already. And they are so happy to introduce you to their friends and family and try and help you because they were once arriving here, not knowing anybody. And it's a very, very positive energy. The whole culture here is face-to-face. It's not they do use WhatsApp a lot, but it's not Zoom. And it's not formal meetings. It's very informal. And there's a very, very healthy, what I would say, sense of community here where everyone will offer their help, make introductions. And most people here have more than one source of income, which is quite interesting. So you can feel the energy here. And I think it's also quite a happy place. You can do well here. You can make money here. You can keep your wealth. It's relatively safe. If you like cars, of course, it's a good place to come. If you like big engine cars, the petrol's cheap. And I would say the cost of living here, all factors considered, is no more expensive than a capital city in Europe. The schools here are good. The schools here are very, very good. You need medical insurance here, like you do in a lot of countries, and they're first class. They're excellent. The cost of property, most startup founders come here. Once you've got your license, you then have to get your visa. The visa gives you residency for 2 years, and that enables you to earn a living. But you need an Emirates ID card, which is the key card, which allows you to open a bank account and also rent a flat. You can't rent anything or do anything without an Emirates ID. You can arrive as a tourist and get an Airbnb, of course, but if you want to get a 6 or 12-month rental of a property or an office space, in fact, then you need to be on the ground. So the soft issues here are really important. It's convenient. Boy, is it convenient. Everything is very clean. The only downside, I would say, is that the roads are busy, and you need a bit of courage to drive on the roads. So hesitation doesn't get you anywhere. But I quite like driving here. It's a lot of fun. It's a challenge. But is that a downside? I don't know. Obviously, the heat. In the summer it does get hot, but everywhere's got air conditioning. And occasionally you get the odd dust storm, which you get bad weather everywhere, right? So I would say lifestyle here for if you're an entrepreneur or you're a family or a business owner and you want to relocate, then it's a fantastic place for creating a new life. And things can happen very quickly here. That's the thing. So yeah, that's what I would say. It's a good place to consider. Where else would you go? I mean, it's maybe Europe. Well, that's challenging. You go to Hong Kong, well, that's challenging too. Singapore is not what it used to be. It's very humid and hot. So where else are you gonna consider? It's got to be up there, hasn't it, as the number 1 or 2 or 3 destination potential. The aspect here is that visitors here respect the culture, and there are rules here, and they have zero tolerance to certain behaviours, and everyone knows that. So therefore, it's a light touch of authority. They leave it to you to be a grown-up and to be sensible. But if you seriously step out of line, for example, they don't like debt, they don't like financial sort of oddity behavior, and they will move swiftly and they'll shut you down and ask you to leave. So there are, 200 nationalities here, everyone gets on, and it seems to work. But behind the scenes, there is this sort of fairly firm set of protocols and rules. And that's what I said at the outset. The protocols and nuances of meeting the families and the local Emiratis here, it's actually quite easy to offend them if you don't know what you're doing. And you think you're being polite, but actually, it's not working. So that's a big factor. And it does take a while to learn those protocols and nuances. And that's where we help, because we can help guide and steer.
I really would like to come back a bit to your experience working in Solarex Ventures. And, the reason why I'm asking this, because I know that you was involved in the capital markets. So you was discussing a lot with startup founders. You was getting many, many deals on the table to review, to check and consider to invest or not. Or maybe you helped them also to raise capital throughout your partnership channel. I really would like to get some piece of your experience, and understanding. In your opinion, why the majority of startups fail and how it differ compared with those who survive?
It's an old sort of question that gets asked all the time, isn't it? So why do so many startups fail? And the standard stock answers are quite often is they overestimate or underestimate the market opportunity, because timing is a massive factor. The other aspect, of course, is quite often founders are undercapitalized. They don't have enough runway because it takes far longer than you normally anticipate to get that head of steam, to get that revenue, to get those first customers, to get traction. So quite often founders massively underestimate that. And the way I think it always takes 3 times longer and 3 times more capital than you first anticipated. The other aspects are sort of more softer issues is that If you're launching in the UAE, it's about selling. So let's roll back a little bit. So what is a business? A business is a bunch of people that sits in a structure, and the business has the ability to create demand for their products and services, fulfill that demand, and then collect the capital. In a sense, that's what a business does. So breaking that down into simple sort of chunks, the ability about creating demand for your product and service. Are you going to get lost in the noise? How much competition is out there? How do you differentiate? And how do you get attention of customers in the market? And there's these armies of sort of tools now, AI tools and generative AI and bots and what have you. And I have to say that that's sort of clouding the issue in a sense. On the one hand, it allows you to have lots of things going as a handful of founders, maybe a handful of people in your company. You can deploy all of these technologies to give you more sort of heavy lifting, if you like, more bots and agents doing different things and tasks behind the scenes. But at the same time, maybe it's a generation thing. I find that quite annoying. And in this region in particular, face-to-face really matters a lot. So the old-fashioned marketing and sales techniques tend to work much better here because it's about relationship building. So the front end of your business, yes, you can automate it and you can do loads and loads of reach out and what have you, but maybe that doesn't fit well with your target audience and how they want to be sold to. It's a major factor, and we've touched on in the past why, my view, digital transformation just doesn't work, because it's about the operating model, and it's all about, whether your customers will want to talk to a real person or a piece of technology. I prefer to talk to real people. So that whole front end piece is really important. The other aspect is building your narrative and gaining attention, isn't it? Because it is online and social media. It's very difficult to be heard. It's very difficult to be different. And now, again, with all of these different tools that generates all of this sort of social media content, all your Instagram posts and what have you, in a sense, it's even harder to get heard. Those are sort of mechanical things. And then operationally, can you turn that interest into, a paying customer, and can you keep them? So that sort of is quite a traditional sort of view of things, isn't it? The key that often founders also sort of underestimate is that they quite often believe their product is the best. They believe their service and offering is what have you. And I think you need to test that early. Before piling in loads of cash, you need to test to see if you can get some market traction, some market engagement, to get some, if you like, some confirmation. A lot of people say, you've got to keep innovating. Innovation is about failing as well. Innovation is about trying something, see if it works, pivoting, doing something else. So you have a product, you have a service, but you have to have that ability to adjust, to pivot, to amend the approach. And a lot of founders are too rigid for that. And I guess a lot of it tends to be where you've come from. If you're a software engineer or an engineer or a product designer, and you're not so familiar with the sales front end and the marketing front end, then maybe you're going to be a bit more rigid. But experienced sales and marketeers also know it's about trial and error quite often. And then, of course, the old thorny subjects of pricing strategy always comes into play. Are you too cheap? Are you too expensive? Where is your niche? If you're too cheap, the target market may not see you as valuable. If you're too expensive, but you've got no pedigree because you're a young company, people might find it challenging to swallow that cost. So I think, there's a lot of tension in there. And of course, the thing that often no one really wants to talk about is sometimes the founders don't get on, or there's big gaps in the founders. 2 founders, 3 founders, sometimes they're missing quite big gaps in their experience, or they actually don't get on that well, which often the cracks appear when you're going through the funding round and you're going through due diligence and things like that. Quite often the cracks will appear and they're not behaving as a cohesive team. So I think, hopefully we're touching on, some of the more traditional things, but I think it's also regional specific. If you want to set up in the MENA region, for example, that human personal relationship building is important. You can't get away so easily with an automated platform with loads of agents. It's not going to get the traction you'd hope. So, yeah, I think commonly it's timing, it's capital, It's getting the approach. But the big one that I'm learning, because we work in businesses and we're trying to sell what we have and we're trying to get more traction and more customers, is how do you get heard and how do you get attention is a big one. And I think the technology and the AI is actually making that actually harder, not easier, because everyone can use these tools to start a company and become an entrepreneur. And I think part of the reasons why the perceived failure rate of startups is so high is because you've got thousands of people trying to set up companies when they shouldn't be. They're doing it on the back of a whim or an idea. They wake up in the morning, I know, I've got Gen A, let's start a company, let's get a website, and off to the races. And I think the market is crowded with people that have started businesses that probably shouldn't.
I see also so many companies who are actually developing something very similar to each other. I mean, we are building something what is already in the market. And what is funny to me that we are going to the market and trying to raise capital. As I said, we use like AI tools. We are developing the solution, which maybe it's unique at some point in some specific niche. But the technology part, it's like not owned by them just because it's a bunch of AI tools combined together. So it's like massive problem, I think, in the market. And I really would like to tell to the startup founders who wants to build something and using like AI agents, for them it will be complicated to raise capital because investors will want to see somebody who actually owns the technology.
You raise a really important point. I mean, there are probably 7 or 8 primary AI stacks. Google, Microsoft, OpenAI, Anthropic, what have you. And you're absolutely right. Investors are quite smart. Not all investors, but most investors are going to say, what is your unique IP? What is it that, you're building on somebody else's stack, you're building on open source code. They're not stupid. They know that you're building that. So are you sitting between the legacy world and the new world? Question mark. Have you built a synchronization layer in the middle that, sort of joins the dots up completely? But the big one, of course, that we haven't touched on is what is the problem you're solving? Because you don't sell products and services, you're selling answers to problems. You should not really be selling products and services. You should be showing how you solve a particular problem. And I think that the world of all these tools and bots and what have you is actually very hard to show how you solve the problem. It's actually very hard to show what the problem is. Because as you say, there's so many on the market, and we can probably debate, will AI lead to lots of job losses? I see the world a little bit differently. So I think AI is making it harder quite often for founders because they're focusing on the wrong thing. And you correctly identified it. So what have they built that's unique? What have they built that an investor can say, that's unique intellectual property. I can see where that fits. And I can see how that long-term value might sit on my balance sheet of my fund or the balance sheet of my family office. So that's the first thing. The second thing, of course, is the way to get investors to back you is to show them the answer to a problem that they may also have or be aware of, or one of their portfolio companies has a problem with. And if it's a family, of course, they might be sitting in a large structure of lots of different companies. And the investors, well, they'll be pleased if you say, right, this is the problem, clear, that I solve, and this is how we do it. And I think that's what you've highlighted as well, is building generic AI-driven stack or AI stack tools and platforms and services. It's quite often, it's not clear the actual problem they're solving. They're just trying to be one in a crowded space, and they think that there is a hype or momentum around that particular area, and they're a copycat, and they convince themselves that they can jump on that bandwagon. But I'm not convinced investors are that naive.
In my understanding, if you develop something unique, you need to secure it with IPs, because nowadays, with all those tools combined, you can build solution within 2 days. So basically using some OpenAI solution, builder, let's say, you can build any kind of solution very quickly, and you can make this copycat, as you said. So for me, I think it's very important, if you have something unique, you need to secure this until you get IP and then go to the market, because, if you really solve this unique problem, sooner or later you're going to have competitors. So IP, it's like security for you, to secure your, ownership on that specific solution.
Yeah, I think IP has its good and bad, isn't it? So as soon as you file IP, you're showing everybody else what you've got because there's an IP register. So there's two arguments here. Securing your IP, yes, I get it. The best way to secure IP is to win customers, get your product to market, and keep innovating, keep adding value add, new iterations, improving what you've got. So that's about speed. That's about speed of innovation and speed of change. So I agree with you. There is a level of protection, but I think best protection comes with getting it to market and getting scale.
Yeah. One very, very interesting question, at least for myself. Despite all this hype, all the investments into the market, why majority of the companies still fail? If you have capital and you have support from your investors, why still so many companies are failing after receiving millions of dollars into the business?
It goes back to quite often the market timing. You get the hype curve. So Silicon Valley and all the big VCs, they'll drive the hype curve. And that's all about, of course, inflating the valuation. And if Silicon Valley and all the big VCs get behind it, then quite often you can get silly valuations with a company with not much revenue. I mean, you've seen it. So I think that's a factor. The other factor of you can receive loads of capital and fail. I mean, let's look at sort of like the first iteration of Uber. It struggled, and then there was a big change made. And they're not alone. There's lots of companies like that. And I think that comes down to different kinds of skill sets, doesn't it? You have founders that are very good at starting things from ground zero and getting maybe to the first 5 or 10 million. But often it's a different skill set to grow it from 10 to 50, 50 to 100, and then a billion. And I think that's also where founders go wrong. I think on the one hand, you have the imposter syndrome of suddenly these young founders quite often are successful and got a lot of money on paper, and they're uncomfortable with that. They've got to grow into that sort of role. But also, I think they either get advice from the wrong people, but also they don't have sufficient skills in the management team, and they make some awful decisions. They deploy the capital at the wrong time. It doesn't take very long for a company on a hype curve to just suddenly plateau or just fall off the edge. And there's been consumer retail as a classic example, isn't it? Where you have a restaurant that's amazing, you raise capital, you want to replicate that restaurant, and then it does okay to maybe 10, 20, 15 restaurants. But then when you scale it en masse, the quality dips. You find it difficult to keep that quality up. The food coming out of the kitchen is not so good. And then all of a sudden, your customers start abandoning you. And that template happens across nearly every industry. You have this initial success, and that jump to scale, which is what the investors will want you to do because they're looking at their exit. That's the inflection point where companies really lose the plot and they deploy capital in the wrong way, too much capital, but they don't have the skill sets. The founders believe that they can do it. I've got it to 20 million, so I know what I'm doing. Well, actually, you may not have a track record to grow it to 100 million. And that's maybe where the founders, struggle with the investors, because the investors will have you on hurdle rates. They'll have a deal which allows them to dilute you. If the founders get diluted, then their head goes down and it all gets a bit funny. And then eventually, they show you the door. I think, it's companies that fail. Quite often it's probably they have a good product, the right place, the right time, but it's maybe how they scale and how they grow. Too fast, not fast enough. Probably too fast, and the choices they make, I think, is a big factor. And I'm not sure the investors, like the private, the venture capital market, is healthy guidance at the same time. It may be a bit controversial to say that, but if you've got a board and you've got advisors and they're not related to the investor, I think that's healthy. But quite often, if you've got VCs and private have board seats, their interests are different, and I think that can create tension and friction with the founders as well.
Yeah. And based on your experience, how often investors actually support the startup founders after investing? If we will take percentage. So based on your experience, how many of investors you knew supported, a lot compared with venture capitals was not so supportive?
I think that's another excellent question. And I think that in my mind, I'm thinking about angels. I'm thinking about exited business people that are sitting on cash. So they bring cash, but they bring expertise. And I think that whole angel investing, and some of them are super angels. Some of these guys have built multiple businesses and they invest in lots of small businesses. I think that's a vital lifeline and a vital source of partners and guidance for startups. If you haven't done an angel round, do an angel round. not necessarily just friends and family, but do an angel round. But some angels will go 1, 5, 10 million. So angels can get quite big. Or you get an angel sort of group of angels that sort of that masquerade as like a pseudo VC, but they're not. They're a bunch of angels, and then they can pool their expertise and what have you. And I think that's really important. I did a leverage buyout backed by a VC of a business process outsourcing company. I just felt that the venture capital company that backed didn't really understand the business. They saw the potential, but they didn't understand the nuts and bolts of the business. When we were having to make certain decisions around operations and process outsourcing, they didn't really understand it, and that caused some challenges.
Thank you. Thank you very much for those answers. It's really valuable. I really would like to ask you, Nick, how do you see the future of, let's say, 3 years from now, in terms of where the businesses are moving right now? Just would like to understand your opinion on that.
Last week at our family office summit, I stood on stage and I announced that we are entering a completely different structural shift, which is computation and technology driven. And this is your startup audience might resonate. Computation has now reached a point where it's almost limitless. And if you build an organization with the right AI tech stack, it's no longer a depreciating asset. Tech has always been a depreciating asset. You write it over 3 years. But if you build the right tech stack, given the value of GPUs and servers right now, it's an appreciating asset. We're also entering a realm where, how do you define what a well-run company looks like? Given what we've just talked about in terms of bots and tools and what have you. How do you value a business? Is fundamentally changing right now. And here's the example. Is a well-run business a billion-dollar company with 5,000 staff? Or is it a billion-dollar company with 50 staff? Or is it a 100 million company with 2 staff? All are possible now. So what's happening is how to sort of work out what is a well-run business and what is the right way of valuing a business is all being thrown up in the air right now. And it universally is quite interesting. The other aspect of the structural shifts that are going on right now, and these are big, is that data sovereignty is now becoming a massive, massive issue all over the world. The geopolitics of data is becoming a real challenge. You have opposing forces. You have China, you have America, you have Europe, all with their own ideas on data sovereignty. You have the Patriot Act, you have the Cloud Act in the US that forces the cloud providers to hand their data over to government. So the argument is, if you're a startup with a product or service, you need to have this in mind, because data sovereignty is certainly here in the UAE. There's some real conversations happening that the government, the ministries and the families do not want to hand their data over to Microsoft or Amazon so they can then train their language models, because it's proprietary data and it's their IP and it's their means of creating wealth. So we're right in the middle of a massive structural change now. And I do think that the age of the hyperscale data center is not going to continue at the pace it is because of the grid. We don't have enough energy. The data sovereignty is a big piece. The other thing is processing, computation. So AI is all about generic AI or generality systems or agentic, whatever. These are just peripheral tools. But where the real AI battleground is happening is in infrastructure. It's in autonomous driving cars. It's in healthcare. It's in city logistics and what have you. And that computation needs to happen in situ at the edge where it's needed. No network latency can be accepted, especially in an autonomous driving car. It has to be less than 10 milliseconds. You can't do 200 milliseconds because, somebody might get injured. So computation, obviously with what NVIDIA and AMD and the others are doing, the other trend I'm seeing is that you don't need cloud, you don't need hyperscale. You may need a hybrid version. So you may want to run some services on cloud because it's convenient, but it's also expensive. But there is a real shift in terms of pulling your data and putting your computation in place where it's needed. So for all those startups out there that are thinking about it, think about how your product and service is going to feed that new world order in a sense. In my view, the internet has always struggled. is because data has no intrinsic value. It's 1955, Dr. Donald Davis, packet switch networking. You basically get a bunch of data, you disseminate it, you fire it across lots of different wires, and it's repackaged the other end. That's how the internet still works today. So you're firing data or bits down a electric wire, but the data itself has no intrinsic value. So the problem we're facing, of course, is who created it, who owned it, who last touched it, who is going to, has it been changed? And what you're finding is that 90% of the data going through enterprise and large companies and government is data that they shouldn't have, and they shouldn't own it. And they have no idea whether it's something that they can rely on. And generic or generality systems or Gen AI is just compounding that issue, because they take hallucinations, they take lies, they take half facts, false facts, what have you. It all goes into the mix, and then it's presented as the truth. And what we're seeing in financial services, of course, and compliance departments in large companies are losing the battle here, because staff go home and use their, Gen AI to do their projects and show the boss that they're really clever and really good, right? So once you're starting to create PowerPoint and financial and Excel systems, and and you're building those reports and dashboards using Gen AI, on which you're making strategic decisions around deployment of capital, IP, and what have you, my view is that's unsafe. Yeah. And there are technologies coming through which gives data intelligence, because number one is data sitting in your server in your organization. You need to know its origin, who created it, who owns it, who has access. And access and permission are two different things. And who last touched it. And if you think about what's going on with cyber and hacking and what have you, there's a lot of red flag data being pumped into organizations and countries that is going to create havoc. We're not just talking about, sort of Trojan horses and viruses and things, but a perfectly innocuous looking financial document will be loaded in, sitting on a server from which the chief financial officer and the board are making decisions, but it's completely spurious data. So this data sovereignty, this geopolitical thing, I think what's going to happen is I think organizations and governments are going to bring their data back on premises. The nature of compute will be containerized, small, localized data centers that can be powered off grid. And I think the whole nature of computation and who owns the data is, over the next 5 or 10 years, is going to radically change. And you can run layer one protocol, a blockchain protocol that actually gives data its inherent properties. But there'll be no global standards, of course. But until we make data intelligent, we're going to struggle. But if you did, commercial trade and whatever would accelerate exponentially, because it can be relied upon, it can be trusted. You know the truth, you know who owned it, who touched it, and what's happening. So I think we're in that flexion point where data is going to be the new battleground.
Yeah, I agree 100%. And even myself or my team members, who are working with, let's say, ChatGPT or other, solutions, before I input any information, I really think twice, is it sensitive business information? Can I share it with ChatGPT, for example? Because I heard a lot of situations when people told me that we've been searching for something, researching, and suddenly we got some really, good piece of data, and it looks like that this piece of data was of our company, let's say.
That's the big fear here, that their data is appearing, in other people's hands. So I think, that's for startups or founders who are plotting what happens next. If you are trying to create a new company, obviously you're trying to look into the current, but also the future, about what the problems that you can solve. Data is going to be a big one. Energy is not going to be solved quickly. 60% of data center capacities in America, and they're about 150 gigawatts short of what they need. If you want to put autonomous self-driving cars on the roads here in Dubai, which is the plan, they want to put 100,000. Just putting 10,000 will consume all the data center compute capacity they have here already. So I think what you're going to find is that, the needs of cities, the needs of countries to secure their data, to secure their water, their supply chain around food, their actually materials and what have you. I think, and again, across Europe as well as, sovereignty, I think will come back on the table big time, is because countries will need to have assurances and strategies to start controlling some of these aspects, because it's all about their future national security. And I think those agenda items are going to come back into view very, very soon. And in certain parts of the world, it's already has.
Yeah. So I really like the idea that, you need to think about the future and what kind of problems we're going to have in the future. And this is my personal advice to the startup founders who wants to build something really unique. We need to consider this future, what's going to happen next after all this, AI boom. And then to think about the solutions which may help in the future to solve those problems.
I think it's a good thing to finish on, really, Darius. I think that's because that's posing the question. Because I think the thing that AI is doing is meaning the pace and rate of change is accelerating. The pace and rate of geopolitical scenario is accelerating. We can get into all different aspects of that, but there are lots of big forces moving the agenda right now, and things happening much quicker than most people suspect.
Yeah. Thank you, Nick. It was a pleasure to meet you again, as always. Thank you for joining the show. This show is going to be very valuable for the audience, which will be looking this episode. I really appreciate your time. I know that you are a very busy person, and I'm so excited. I'm so happy to have you on the show. So I really wish you good luck. I really would like to recommend Nick as a gateway to the UAE and MENA region. Even if you are building business in that region, still, I believe Nick is going to help you a lot. Please, you can always reach Nick.
Thanks, Darius. Yeah, thanks. It's been good.